بسم الله الرحمن الرحيم.
سبيل الدموع سبيل مريح، تنهدى يا صاحي كي تستريح، وبث الدعاء الخفي الصريح، يسعك الفضاء الرحيب الفسيح. سبيل الدموع سبيل مريح، تنهدى يا صاحي كي تستريح، وبث الدعاء الخفي الصريح، يسعك الفضاء الرحيم.
الحمد لله رب العالمين والصلاة والسلام على رسول الكريم أما بعد السلام عليكم ورحمة الله وبركاته. In today's lecture, we're going to discuss the UK ACN Compensation Scheme. This is somewhat dated, or the document that I prepared, which is, you can download that from our website, which is www.irtis.org.uk. IRTIS, which stands for the Institute for the Revival of Traditional Islamic Sciences. So it is somewhat dated, and I produced a paper way back, approaching nearly 2 years ago now, sometime in the spring of 2015, 22nd of March 2015 to be exact. But due to, and there's a number of reasons why I present it today. One is because there's been numerous requests to be able to have this in a sort of a lecture video format. Secondly, I wanted to be able to have the opportunity to explain the process behind how a scholar may try to analyze a particular scheme or a particular transaction or financial change. And thirdly, amongst maybe a few other reasons, is to show that traditional Islam, as IRTIS stands for, is still in a position to be able to apply itself in fairly new and unique, novel financial arrangements. So it's not outdated, it's not sort of something that should be left in the dark ages, but it's something which is as applicable now as it was centuries ago. As an introduction, ACN, for those of you who may not know what it is, it's referred to as a compensation scheme, and it's described as an MLM, or a multi-level marketing scheme. Others have considered to be somewhat more of a well-concealed pyramid scheme. And the purpose of today's lecture is to determine the ruling based on Islamic principles. And so what are we going to use to be able to reach that conclusion? What we will use is documents which are ACN's own documents, in order to be fair and representable, rather than use competitors or individuals who've assessed ACN. So things like the ACN's compensation plan overview, which was effective from the 2nd of March 2015, and also their policies and procedures, and their general terms and conditions of the UK Independent Representative Agreement. So as I mentioned when I started, this was sort of springtime 2015. So if there have been some changes subsequently, then this is only referring to where it was at that time. So that's the scheme. Well, the scheme is described by ACN itself, that there is one starting position and 6 earned positions. And it does say within the documentation that all ACN representatives must acquire and maintain customers in order to qualify for their positions. So it does mention that there is customer sales involved. The starting point for an independent representative, or IR for short, is a team trainer, and there the individual has to pay up £325 plus VAT, which based on the prices, and it currently is £390. And it was not absolutely clear what this fee was for, but we will analyse this later on. And you will see that there was also an annual fee required as well, and it did clarify within the documentation, which is important to understand, is that the individual was not employed by ACN, but rather was self-employed. Once a person was going to move forward from a TT, a team trainer, they would need to reach a qualified team trainer. And the qualified team trainer meant that the TT would have to acquire and maintain 6 customer points and acquire 3 preferred customers. The condition was that the customers be of different households service type or wellness account. And furthermore, in order to qualify for the 6 earned positions, not only require the acquiring of customers, but also the recruiting of further independent representatives. This is an important point to note, is that this is not just an individual joining an organization, but also an individual aiming to recruit other individuals to join the organization. And once you go past the QTT, you're having to understand that the next, which I call the earned positions, are based on the number of recruited IRs. So the initial basic position, obviously there is the starter, as we call it, the starter fee for the team trainer, and then he can become a qualified team trainer. But to move beyond there to the earned positions, and there's 6 of them, this is based on recruiting IRs. And obviously depending on the number of recruited IRs, and just to remind you, IR is the independent representative, this is the individual, the Joe Public. Then depending on that, they would get the rank. And there were various ranks as executive team trainer, executive team leader, it goes on, team coordinator, regional director, regional vice president, and senior vice president. So you can see that as the individual is drawing more customers, more general public members of the general public towards this scheme, and they're becoming new IRs, this individual is slowly moving up this scheme. And as we mentioned, obviously this is the multi-level marketing aspect of it as ACN identifies itself. Just to give you an example, so if we look at the requirement level for RD, and RD is a regional director, this can be earned when you, at least you have to have 2 recruited IRs who achieve the level of TC as well. So not only have you recruited 2 IRs, they themselves have gone through the system, and as we mentioned, in order to go through the 6 earned positions, you have to recruit more IRs. So these recruited IRs are in themselves also recruiting other IRs, and they've reached to the level of team coordinator or even above in 2 separate legs, meaning that the individual who's the founder of this small wing has got 2 IRs, and then in the separate legs there's also further development, because this goes on and on and on. And then her third leg has 200 customer points. So basically you need to have 600 customer points through the 2 TCs, which are the team coordinators, and 200 through other means. So to earn that number of points through the organization would require a large number of recruited IRs, as earning that number directly would be extremely difficult. So that clearly shows that there's a push, or there's an inclination or a statistically sort of deviation, you could say, towards recruiting IRs in order to make your income, more so than gaining customers and selling the product. And bear in mind that every time a new IR joins, £390 is paid to ACN. So where does the income reside for these IRs? How do they earn money? They split into 3 areas, and I'm not going to go into great detail for each one, because hopefully you can access the document and you'll be able to see this on page 2. We will have a link to our video that goes up on YouTube to access this particular text, so you'll be able to read it along with the video. One is what's called customer acquisition bonuses, or CABs, and this is where an IR sponsors a new TT who then becomes qualified in their first 30 days, and they receive a payment. So they recruit somebody, train them up within 30 days, and they will get a payment. This is called termed as compensation, and there's some details explaining that. The second one is the personal monthly commission. So TT can earn from between 1% and 10% of his personal customers' monthly bills. So depending on his customers, what they are paying, he can get a percentage of that. This is based on the number of customer points and the TT has earned so far. So for example, 25 customer points would earn the TT 1% of his personal customer bills. And if he had 30, then it would be 3%, and it sort of carries on approximately like that. The third means of income is what's called the monthly residual earnings commission. And the founder earns commissions on all the customers' monthly bills in his organization, meaning he's the founder, and anybody who then he recruited, and then they recruited, so he becomes the kind of head of this little family or this part of it, because don't forget, he was also recruited by somebody else. So he's also part of his upline and his downline. And what we find here is the founder earns commission all the customer monthly bills in his organization at personal monthly commissions as described in point 2, and the levels and generations below at various percentages. What he's saying here is at point 2, which we just explained, is that that's his own personal commission. But not only is he earning his own personal commission from his own customers, he's also earning from the customers of those who he's recruited, and they subsequently recruited others, as in his family with a small f rather than the big family. He also earns from there as well. So you can see obviously there's quite a large input there. I made one point here on the end of page 2, linking to the page 3 of the document from ACN, in which it says, when it's discussing the customer points and the commissionable revenues, the various products and services are mentioned with their associated customer points and commissionable revenues. On the final page, the various cabs for 5 of the 6 earned positions are highlighted, mentioning the different bonuses each position can earn depending upon the number of TTs qualified. Again, the impetus seems to be on recruiting IRs. That seems to be where the money is if you're going to make a significant amount of money. And remember, every time an IR is recruited, £390 goes to ACN. Yes, this person gets a share of it, but that's only based on his CAB, his customer acquisition bonuses, when he sponsors a new TT and then trains him up. He's got something coming from there, and also from his personal monthly commissions, which is down to his own effort. So he's not getting much of the £400 which is coming in, which obviously the bulk is going to go on his upline for those people who are above him. So when we look at all these, it's the job then of the scholar to be able to then distinguish or to define the various transactions which are taking place in order to then pass a ruling on each transaction. And that's exactly what I turn to on page 3. So the first transaction is the starter fee of £390. There's no sort of detailed information as to what this charge is for. There's some suggestion that it's paid as a bonus to the sponsor, as in the individual who brought you in, due to the time he's spending in training you up. It seems to suggest that. Even if that is the case, it will not be the sum of the amount. It's clear as well that one could determine that this is distributed on the upline above him, amongst the individuals higher up the organization. It is fixed, an individual cannot join the scheme except if he pays it. And then there's also the mention of an annual renewal fee, which is mentioned in the policies and procedures, and it says that is for admin support. But the strange thing is, admin charges are also levied against the bonuses that are paid. So there seems to be some discrepancy there, that admin charges are also being charged annually with a renewal charge, but every time the individual is making some money, admin charges are charged on that money as well. So there's some discrepancy going on there. If we look at the revenue from the starter fee, then one individual will recruit, say, 10 IRs, who will recruit 10 others, in other words, down to level 2 with 10 legs. So what we're saying is if one individual recruits 10 IRs, and then these 10 IRs recruit 10 others, so we've only gone down to level 2, so level 1 was the 10 IRs, level 2 is that each IR has now recruited 10. You'll find that the income generated in 1 month will be £39,000. That's just from one individual recruiting 10 people and not doing anything else, and those 10 people recruiting 10 each. That'll be £39,000. If we were to go down to level 5, as in then they recruit 10 more, they recruit 10 more, that will mean that in those 10 legs, £39 million will be raised. And that's a lot of money. This fee could be explained that it's in exchange for the business opportunity, one could argue, or the distributorship being offered, which can only be fully realized based on the individual's effort. So it could be that this £390 is an opportunity for this person now to go make some money. He didn't have that opportunity before, and that's what he's buying for this. And through discussions with current IRs of ACN, I came to learn that an IR received a personalized website, business support via conference calls, meeting opportunities and seminars. The online business management allows the IR to track their team and its progress. Therefore, it can be argued that the startup fee is in exchange for the opportunity, business infrastructure, training and support offered by ACN. This understanding has been brought about from discussions with the current and former IRs. So it seems to suggest that this starter fee seems reasonable. It's an offer, it's an opportunity. You pay for this, this is what you get in return. We then look at the second part is looking at the type of relationship between the IR and ACN. Now there's a number of ways we can look at this. One way is it could be mudaraba. Okay, so let's look at that. Mudaraba is based upon the two parties, the capitalist, Rabbul Mal, and the entrepreneur, the mudarib. And the capitalist gives his wealth through wakala to the mudarib, and he invests it in order to make a profit. The ratio of the distribution of the profit is between these two parties. And this is decided at the time of agreeing the contract. Both parties suffer and benefit equally, as in the capitalist loses his wealth, obviously, but the entrepreneur loses his time and effort. And both share the profit when things work out well, according to the contract as they stipulated it. However, there's a problem with this in that a mudaraba can only take place when we're talking about capital in the form of liquid assets. In other words, money, not through goods or services, okay, which is what it mainly is going on through ACN. The profit value must be known in order to be aware of a profit has been made, so we need to know what profit has been taken place, and then it can be split accordingly. Both these, knowing the profit margins, are absent in the relationship between the contract between I and ACN. Therefore, this is not a mudaraba. So if it's not a mudaraba, is it wakala? Okay, so that's another area we can look at. The mudaraba system differs to the wakala in terms of respect to profit distribution. So in the former, the total profit is shared between the two parties based on what was agreed when the contract was drawn, and the latter, an agreed profit is paid to the muwakkil, and the remainder the wakil takes, and as a result acts an incentive to make the business as lucrative as possible. Now here we can see in ACN that ACN is not the owner of all the goods and services that it is supplying. Some are its own goods, but some aren't. So therefore the permission to sell the property is not relevant here. Possession is not relevant here. And the issue of an agent recruiting another agent who recruits others is accepted approach, so that's fine as well. But one issue still remains, and that is that the profits are not agreed beforehand. So as a result, ACN know which price they wish to sell the products. The products cannot be sold at a cheaper price, so there must be a profit for ACN. They must be already included within the price. It wouldn't make sense otherwise. And once that profit is made, the ayah can get a small percentage of earnings. So in conclusion, we can't say that this is wakala either. Okay. The percentage is known, however, the earnings are not, as the value of customers' monthly bills is unknown at the time of agreement. So the issue then remains is that this unawareness, does it lead to dispute? Because it's a concept within the Sharia, which is أَهَذِهِ الْجَهَالَةُ تُفْضِي إِلَى الْمُنَازَ أَمْ لَا? That this type of jahala, does it lead to dispute, does it lead to disagreement? Now the only area that we could find within the financial setup of in the Sharia is something called samsara or brokerage, through brokering, like a middleman basically, a go-between. In this case, there is a permissibility the fuqaha have given for the simsar to work on an unknown amount as well as a percentage of the sales, and that can be utilized in this scheme as well. So this process can be facilitated through this brokerage. Okay. There's some other discussion which, I'm conscious of time and the complex nature of this, I'll leave you to read in yourselves, is the individual, when they join, they're provided with the policies and procedures, so they're well aware of what they're getting themselves into, and they sign up to that. So it could be argued that even though this percentage may not be worthwhile or not fully known in terms of the profit, but because there's some agreement there, then that should be fine, because it removes the issue of resorting to dispute and argument. Also, at the time when I was doing my research, I was not aware of any legal challenge by any IRs based upon this either. So one can assume that is fine. However, in the contract, as I've discussed in a number of these business transaction videos, there are clauses which make this contract seriously problematic, and you already know Shartul Fasid, which was referred to. And you see those in a number of them. I'll just read one out for now. ACN reserves the right to reduce commissionable revenue by a percentage factor for promotional plans, products, negotiated pricing, or certain services. And also a number of others. So this Shartul Fasid, which I've already mentioned, makes the contract problematic, seriously. And because this is in fi ma'na riba, and riba is impermissible, then any transaction which involves these clauses would also be.
يسعك الفضاء الرحيم